With today's market being so highly priced, we have a lot of investors out there scared of a market crash or a recession. A lot of people are worried about their precious stock portfolio crashing and being left with half of what they originally had. Now in this video I'm going to explain why a recession is a positive thing for those smart investors out there. First, let's explain what a recession is. A recession is a period of economic decline that lasts for at least a few months. Now what you'll normally see in a recession is those stocks you so carefully invested in decline as well. So what do we do in a recession? First, of course, we wipe our tears with our sleeves and start thinking about our investing approach. Did we invest in these stocks because they were a quality company trading at a good price? Did we understand the company that we invested in? Well, I hope so. If you didn't, then go review that company again. Do you still think it's a good company? If so, it's now trading at a cheaper price. So perhaps the question might be asked, why not buy more in this company? That's the exact question you should ask. And for those who did invest in a quality company that they understood the value of, then you should definitely ask yourself that question. When that company was more expensive, you bought it. So why aren't you buying more of it now that it's cheaper? Here's a scenario. You've wanted a Ferrari ever since you were a kid. The Ferrari was selling for a $200,000 price tag, but you just couldn't quite afford it. A few months later, you look at the price of the Ferrari and it's now selling for $120,000. That's a 40% discount. Mate, you bet your bottom dollar you're going to buy that Ferrari. Every smart investor out there knows that a stock market crash means a sale. It means stocks are getting cheaper and thus our eyes are more open to investing in that stock. Now what's the one thing you need when investing in a market crash? Dollar bills, cash, money in the bank. If you think a stock market crash is coming, then make sure you have money to invest in shares when it does happen. Our good friend Warren Buffett has $100 billion of cash on hand at the moment with his firm Berkshire Hathaway. Now the big question is, does he have this much cash on hand because he thinks a market crash is coming? Or is it simply because he's getting so much money to invest in that he can't spot cheap quality companies to invest in? I'm not 100% sure, to be honest. The one thing that I would like for you guys to take from this video is that when a recession, market crash or depression does decide to show its face, that is not necessarily a bad thing. Stocks have gotten cheaper and it is a better time to invest than when it was more expensive. Obviously. I hope this video provides you guys with some helpful information for what to do in a bear market. Subscribe to this channel if you want to learn more on investing in the stock market. Enjoy the rest of your day, guys, and bless you all.